Welcome to this explainer. If you're an investor or entrepreneur looking to formalize a business in West Africa, you probably already know that navigating the red tape can sometimes feel, well, a little bit like a maze. But hey, it really doesn't have to be. Today, we're diving straight into the exact step-by-step roadmap for registering your legal business entity in Ghana. By the end of this explainer, you're going to have a crystal clear, highly actionable blueprint. Let's get into it. Ghana has steadily built a rock-solid reputation as a highly attractive, politically stable hub for investors. It's built on a strong foundation, and the government there has been actively pushing policies to drastically cut down the cost of doing business. And you know, the numbers absolutely back this up. We're talking about a nominal GDP hovering right around $50 billion. The economic opportunity here is massive. But as with any emerging market, grabbing a piece of that pie means you absolutely have to understand the local bureaucracy so you can get started legally and securely. So here's our roadmap for this explainer. We're going to cover setting up in Ghana, the essential rules and capital you need, the actual step-by-step process, and finally, your post-registration must-dos. All right, let's kick things off with Section 1, setting up in Ghana and what your actual entry into the market looks like.
Which brings us right into Section 2, essential rules and capital, or what I like to call the gatekeeper requirements.
So before you start filling out a mountain of registration paperwork, we really need to look at the gatekeeper rules that decide if you even qualify in the first place, especially if you're bringing in foreign capital. If you're an overseas business expanding into Ghana, you've got a few options. A super common one is the external company structure. Basically, this lets a foreign business establish a formal presence in Ghana, operating completely legally while staying compliant with both Ghanaian regulations and your home country's laws. It's the perfect bridge between two jurisdictions.
But wait, here is where we hit our very first major compliance checkpoint for foreigners. The Ghana Investment Promotion Center, or the GIPC, strictly dictates your minimum equity contributions, and it all depends on your ownership structure. It's kind of fascinating how it scales. If you form a joint venture where a Ghanaian partner holds at least 10% equity, your minimum foreign equity requirement sits at $200,000. But if you want a wholly foreign-owned enterprise, boom, that jumps up to $500,000. And if you're setting up a trading enterprise, strictly buying and selling goods, you're looking at a massive $1 million. You have to prove this capital either through cash, capital goods, or a mix of both. But hey, knowing your specific sector is absolutely critical here, because there's a brilliant pro tip hiding right in the GIPC guidelines. If your business is in manufacturing, export trading, or portfolio investment, guess what? Those hefty minimum foreign equity requirements completely vanish. Literally zero minimum equity required. The government heavily incentivizes these specific industries. Okay, beyond the money, there are strict personnel rules you've got to follow. Under the Companies Act of 2019, every single company incorporated in Ghana must have a minimum of 2 directors. And here's the kicker. At least one of those directors must be ordinarily resident in Ghana at all times. If your resident director leaves the country or steps down, and you keep operating for more than 4 weeks without one, you are going to get hit with daily administrative penalties. So locking down your local personnel, huge priority.
All right, moving into Section 3, the step-by-step process of actually navigating the ORC.
With all those capital and personnel rules out of the way, let's walk through the actual chronological process at the Office of the Registrar of Companies, the ORC. This is your core procedural roadmap, literally walking you from your initial business idea all the way to full legal registration. Let's break these 4 steps down because getting them right and getting them in order is going to save you massive headaches later on. Step 1 is your name search and reservation. Before you do anything else, you absolutely must verify that your desired business name is unique, non-offensive, and not misleading. You handle this at the ORC or right through their online portal. If the coast is clear, you reserve it so nobody else can snatch it up. Doing this costs exactly 120 Ghana cedis. But listen, you really have to act fast. By law, the registrar only holds onto that reserved name for exactly 2 months. Once that time is up, you can renew it just one time for another 2 months. But after that, it gets released right back to the public, and you can't reserve it again. So the second you lock in that name, the clock is ticking. Step 2 is getting your tax identification number, or TIN, from the Ghana Revenue Authority. Good news here, it's completely free of charge, and usually only takes about 2 to 7 days to process. You just need a standard government-issued ID, like a Ghana card or a passport. But what's crucial to remember is that this is mandatory for literally all principals. Every proprietor, partner, director, shareholder, and even the company's secretary must have a TIN before you can take another step.
Okay, TINs are sorted. Now, you move to step 3, filling out your ORC registration forms. Stuff like Form 3, Form 4, and your company regulations. Then step 4, paying the fees. Let's look at the costs for a standard company limited by shares. You're looking at a flat 450 CD filing fee to hand in your documents. Plus, you have to pay a stamp duty equal to exactly 1% of your stated capital. So just as an example, if your stated capital is 100,000 CDs, your stamp duty is going to be 1,000 CDs. So you've submitted the whole shebang. After waiting about 2 to 3 weeks for processing, you get rewarded with your final documents. For limited companies, you don't just get a single piece of paper. You actually get a certificate of incorporation, which legally brings the company to life, and a certificate to commence business, which is your green light to actually start trading. Both of these are totally vital to prove your business is legally alive and kicking.
Now for our final stretch, Section 4, Post-Registration Must-Dos to ensure you're staying compliant.
You might be thinking, great, I've got my certificates, I'm totally done. Well, actually, what exactly does happen after you get your certificate? It's a really important question, because if you ignore your post-registration duties, you're going to run into immediate roadblocks and face some super heavy penalties down the line. Those incorporation certificates are really just the starting line of your compliance journey.
Right after incorporating, you've got a checklist of secondary registrations to knock out. You need to physically register your new entity with the local Ghana Revenue Authority office for corporate tax. If your turnover hits a certain threshold, you're also on the hook to register for the 12.5% value-added tax. Hiring staff, then you are legally required to register with SSNIT. That's the Social Security and National Insurance Trust. And, of course, you've got to open your corporate bank accounts to keep your personal and business finances strictly separated. And speaking of bank accounts, here is an absolutely vital checkpoint for foreign investors. Remember those minimum equity requirements we talked about earlier? Well, you have to open 2 corporate accounts, one local, one foreign, and make a direct bank-to-bank transfer of your required equity. The Bank of Ghana actively monitors this stuff, and they will formally confirm the transaction directly to the GIPC to finalize your investment registration. You cannot skip this step, no way around it. Fast forward a bit. Once you are fully up and running, there is a major, ongoing compliance gotcha you need to watch out for. According to the ORC, you have exactly 18 months from your initial date of incorporation to file your very first annual return. After that first one, it becomes a strict, non-negotiable yearly requirement. And trust me, the consequences of ignoring this are no joke. A recent notice from the ORC put it bluntly. Business names that are not renewed shall lapse, and the registrar may remove from the register the business name of a person whose registration has lapsed. They really do not mess around. They routinely strike off hundreds of companies for skipping their annual returns. Your business can literally be erased from the legal record if you drop the ball here. But you know what? That is not going to happen to you, because now you have the blueprint. By understanding and respecting this whole step-by-step process, from navigating foreign equity rules to securing that local director to diligently filing your paperwork at the ORC, you are totally empowered to breeze right through the red tape. So armed with this roadmap, will your Ghanaian business venture be the next massive success story, or will you let the bureaucracy hold you back? The market is ready when you are. Thanks so much for joining me on this explainer, and best of luck out there.